And today's topic I want to be about, in my opinion, the sort of best um, pattern and chart setup, the most predictable one that you can sort of look for to find good entries and basically bank the most you possibly can. And what this pattern is basically called a bull flag pattern, and I'm gonna break it down for you right here actually. So maybe this one is not exactly the best one. We're gonna look at CLWT, I think it was. CLWT, clout basically is what it is. This is a stock that I was looking at today. Basically during pre-market it had gapped up to around this 360 mark, and honestly 10 minutes before market open it was just chilling around like 318. In which case, if it had opened around like 318 when market actually opened, if it broke that, I thought that would be a really good place to buy. But it ended up getting this push through, and especially with it closing around like what is this, like 267, and then climbing all the way up to like 366 or 367 almost. That's like $1 a share. So people are obviously going to lock in their profits here, and you can't really expect it to keep riding up at that point. That's why I got this pretty nice sell off over here. And when market opened, I was kind of hoping this was sort of, because everything is down, like the SPY was still somewhat crashing today, or it was just finding sort of like this little middle ground where it could, I guess, catch a break. So penny stocks weren't really doing anything either. And this had this nice little sell-off in the morning, so I kind of stopped looking at it for a bit. The only other thing my eyes were really on was TOPS, which also didn't do much today. But this one at like, what time is this? Let's go back to the 1 minute chart. This one at around 8:41 started to get this nice U shape on up. And U shapes are another great pattern. The only problem I have with them is that they don't work as much of the time as bull flag patterns, and it's sort of hard to. There's a few areas to buy in a U shape, and you never really know if you're going to be buying at a place where you can get burnt. So you can. I'll just sort of get into this for like a second here. You can sort of buy at the bottom. You can. So basically, this is a U, right? Like you can see that what I'm doing with my cursor, that's a U. If you can't see that, you need to go back to like second grade, and you're a fucking idiot. I'm just kidding. But basically, this is the bottom, but you never really know what the bottom is, because when it's unraveling, you can't see, like I just put my hand there, like you guys can see where my hand is, but you can't see, like this is all you would see, so you don't really know where the bottom is. But basically, when it starts to get that climb back on up, if you're a dip buyer, you'd probably buy here. If you are someone who plays U-shapes, you'd probably buy over here, or like at the break of, over here. But that's not the pattern that we're going to be focusing on today. Today we're going to be talking about the bull flag pattern. Let me just remove all these lines that I drew real quick. I like to do art in my free time because I'm really good at it. So we're just going to get rid of these, and let me break this down for you. So basically what you see here is a textbook 101 bull flag pattern. Now this isn't the best representation of it, but just know that more or less all of them look like this. So basically what this is this run up over here, these candlesticks moving to the upside sort of set themselves up as a pole. So imagine a flag. Yeah, like just imagine the American flag or the Confederate flag or whatever flag you choose to imagine, and sort of picture a pole, okay? So this would be the pole. It's a little bit slanted, but for clarity's sake, we will just make this candlestick the sole pole, and we will sort of just draw it all the way down here, okay? But just know that for reference sake, in terms of actual bull flags, all these candles leading up to like the highest point that are green or red, as long as they are mostly moving upward, sort of set themselves up as the pole of the flag. Okay, so now what you want to do is you want to sort of draw a trend line, okay, connecting all these dots, So it's back to like kindergarten shit. We're connecting dots now instead of imagining the letter U. Honestly, that wasn't the best trend line. So let me just fix that. So simple stuff, guys. You're just sort of connecting these areas that hit the line the most time. That the most amount of times. That's sort of how you want to draw your line. So now what you can see is a nice little flag formed. Okay, so just picture a windy day and the wind is blowing and there's like a little ruffle in the flag, and yeah, that's. I hope you guys can all picture that. Um, it should be not that hard to picture. But basically, this whole area, this is called consolidation, where basically the stock moves on up, and then it gets a little bit of a pullback, and then before moving on up again, that area is called a consolidation period. So it's not always going to look like this. Sometimes it might come back down. But the important thing is when it holds these gains, okay? So it had this run up. And if you've seen my other videos, you know how much I stress how important it is for a stock to sort of hold its gains. It can't just come running back down. An important sign of a strong stock is that rather than moving up quickly and then coming back down, it can sort of find a new area of support somewhere in the middle, whether that be more towards the top of like the high of day candlestick or somewhere more towards the bottom. As long as it is up from its initial position, that's a good sign. And this one held the VWAP. The VWAP is like this pretty purple line that I have drawn for you guys over here. It held it pretty nicely. It came down a little bit under it, but just sort of just climbed back up like it was no big deal. And basically what you want to look for is a break to the upside against this downtrending line. So this candlestick would have been a great entry because it went ahead and if you connect the line, I would say like 366 would be a good, that was like a pretty good sign that it was crossing over the line. And in that case, you would have wrote it up. You could have gone all the way up to like $4.15, which from 366, I want to say, we're just going to do 366 to 415. That's like 13.9%, almost 15% gain in just like 3 minutes. So this is not what I played today, unfortunately. Honestly, I was staring this pattern right in the face when it happened, and for some reason, I just couldn't seem to pull the trigger just because of like with the pre-market and sort of the little dip in the beginning of the day, and then I just really didn't know which direction this was going. But really, if I just listened to my own teachings, I would have made quite a bit. I would have made around like $800 on that play. But it's no big deal. Another example. So one reason I like this pattern is because you see it all the time. You see it every day, different stocks, and it's just so predictable. So here's another one. So you can see I already had this drawn. This area over here, if you're following my cursor, would serve as the pole. This area is the consolidation, would serve as the flag. You can see again it held the VWAP, this purple line, pretty well. And when it broke above that, that's when it got this nice move on up. So basically all the way from 18 cents to 22 cents, which this was actually a 25% gain, which is huge, 25% in what, like what time is this? 8 or 9:34 to 9:43. So not even 10 minutes, maybe 10 minutes if you do the very high, which you probably wouldn't have gone anyway. So we're just going to say 9 minutes. 9 minutes, 25% returns on your investment. That's huge. If you put like 10, we're just going to say 10K down for the sake of making math easier for me, you would have made like $2,500 on this trade. I actually did not get in there either. So you can see as of lately, my entries have been kind of shit, and I sort of have to like stick to my own rules, which I have a lot of trouble doing for some reason. But I actually, well, to be fair, I was notified of the stock after it had broken above the trend line. So I was looking at it over here. So basically all I could see was this. So, hindsight 2020, But when you're looking at it like this, you're not really sure. This honestly did not look that fluid to me. It just looked kind of choppy, and I wasn't really sure if it was going to keep going in the direction that I wanted to. You can see over here, it kind of just flows, and then over here, just this uh, this quick gap up. And when you're talking like in the high teens for cents, a gap up from 18 cents to like 19 cents on a 1 minute candle is pretty big. A lot of people would take that. If you're a scalp trader and you buy like, let's say 50,000 shares, that's a great return for you. I don't know what that is in terms of math, but it's probably like $200 or $300 just from here to here. So I wasn't really sure if I was going to keep seeing a move on to the upside, and it ended up coming all the way up to around 21 cents. And this area, because it sort of established itself as resistance, and on top of that, in my eyes, this sort of became like another bull flag. I know it's pretty hard to see, especially if you're just sort of getting this pattern down. But basically, these 4 candlesticks served as the pole, and then these three-ish candlesticks, 4 maybe, served as the flag. And when it broke above 21 cents, that's where I bought in. So I got filled at like 21.5, and I just sold at like 22. So I made like half a cent per share, and then so half of my shares got filled at 22 cents, half of them got filled at like 22.5. So I ended up making 1 cent a share per like half of the shares that I bought, and then half a cent a share for the other half. But I ended up making like $160 from that. So you can see it's pretty crazy, like what a 1 cent or half a cent move can do for your account in the penny stock world. In terms of a percentage gain, it was not good at all. It was like 2%. Honestly, it was kind of dumb to be buying in that area. I should have bought over here if I was going to. And I got kind of lucky with my exit. It was looking kind of weak. It didn't really look like it was going to get that push through to the upside, so I just sold almost immediately as soon as I was profitable. And one key distinction that I want to make is if you go back and look at what were we looking at, CLWT, is that so this can kind of throw you off sometimes. Basically, when you're looking at the charts in real time, you're not going to know exactly how to draw your trend line. So, for example, if we're looking at CLWT, and it's the morning, and we just have to remove this real quick. Okay, so let's look at it like this. It's 8:44. It had this nice U-shaped pattern, this nice run-up, and now it's having this little bit of consolidation. Naturally, what you're going to do is you're sort of going to draw your trend line like this, okay? And what's going to happen is it's going to get this nice little break to the upside a little bit, and then it's going to go ahead and not really do anything and come back down. So one way to avoid that is a general rule of thumb that I use for drawing trend lines is that just realized this was gone for who knows how long. So we're just going to float it on the top. Actually, we should shrink this a little bit. Yeah, so one general rule of thumb that I use for drawing my trend lines, especially on a bull flag pattern, is that if the candlesticks are descending like this, as opposed to sort of staying in the same area, I would give it more time. So I would give it at least like 6 to 7 minutes, maybe 5 minimum, to sort of get a good idea of what the trend line is doing. So basically what you want your trend line to look like, as we drew earlier, is something like that. And so now you can see you wouldn't have drawn it yet, and then this candlestick would have happened. Still, maybe don't draw it, and then this candlestick happens, and then it all sort of starts to follow this line. So this is a good 5 minutes in after this little bit of a run up. So if you give it time, you can draw a bit more of an accurate trend line, and then you can buy at the real break to the upside, Whereas if you look at the trade that I made today, um, over here, this bull flag pattern, the one that I mentioned earlier that doesn't look that great. Basically, when the consolidation period is sort of like testing the same area over and over again and not really going lower, uh, I would give it less time to sort of move to the upside. So this only took like 3 or 4 minutes before getting a nice move on up, but I attribute that to it basically not really going down in that time period. I had this candlestick that went down a little bit, but most of the time it was just staying at right above 21 cents, and 21 cents was sort of serving as resistance for it. So when it broke above that, that was a good indication to buy, and that's why I still consider it a bull flag pattern. They don't all look the same. Um, you have ones where it has a bit more of a flag than others. This one, the flag was a lot less developed. But the important thing to know is that when it's not really going down, when the candlesticks are not really going down, when it's holding the same price for the most part, if it gets a break on up, that's a pretty good indication to buy, and it's still considered a bull flag pattern. Um, so I think that's going to be it for today's video. Um, I hope you guys found it helpful. Basically, the reason I find this pattern so helpful is because a lot of the times when you're looking at a stock, penny stocks especially, and they're just sort of running up, you get this sort of fear of missing out on them because they just keep going and going, and you don't really know where it's going to stop. But you not knowing where it's going to stop is actually a huge disadvantage because anytime you buy in could be the top and you could end up getting burned. So it's important to sort of let patterns establish themselves, and because when you have patterns, it sort of prevents you from having that fear of missing out because you know it's only going to go up so high before it has some sort of pullback, some sort of consolidation, and some sort of pattern form where you can make a prediction where you like aren't emotional, where you aren't like, oh my god, this thing is going to keep going forever, and you can get collected and you have your trading plan set up, and this way, even stocks that in the morning rip like 50, 100, 200% sometimes, um, you're always going to have. You're not going to chase. Most importantly, you're not going to buy at the top, and you are going to buy at a very strategic entry point where you can make the most amount of profit you can in the most predictable way. So that's why I find it so helpful. Honestly, personally, my favorite pattern to play. There's quite a few other ones that I like doing, but I've been playing this one a lot, especially recently, and I found like the consistency and my profitability go up quite a bit. So I think I'm going to stick with this pattern for a while. This and like break a pre-market high. But yeah, that's it for today. I hope you guys found this helpful. If you do, go ahead and if you did like it, go ahead and actually like the video. And if you have any questions, just leave them in the comments. And if you want to see more, which I will be posting of probably some more patterns and just a few other things about the stock market, because there are a lot of moving parts, especially with penny stocks. Go ahead and subscribe so that you guys can get notified when I post again. So yeah, I hope you guys enjoyed, and peace.